Good evening, dear students. A very warm good evening from my side to you. And I have received a lot of messages before starting the class that how's my health. So I'm perfectly fine. All right. Thanks for your blessings and wishes. And I am completely recovered now. So in the last session, we had discussed about the residential status chapter number 2. We completed all the provision regarding the residential status. Today, I will take your MCQ test of residential status topic and we will move on to our third chapter, which is my last session today, in which we will discuss about the total income which are exempted from tax, whether full or partly. So what are these kind of income? And we have also a very special topic, section 10AA, that is a special economic zone provision. That is not technically in your chapter number 3 in your study, but these are included in deduction chapter, which we are going to study from in the future in the other topics. But we discuss section 10AA over in this chapter again. So we will have the numerical topic also in chapter 3, like agricultural income, which is very important as theoretical as well as numerical. We have a lot of exempted income provision and section 10AA. This is our today topic we are going to discuss. And again, I will share you something new today. I'll tell you what exactly a CA course is, what does a CA technically means. But before starting all this, let's move on to as I usually do, a special quote, one of my favorite quotation. This is my personal favorite quotation. I don't know who said this, but I have read it somewhere when I was studying or pursuing this course, and it actually touched my heart, or you can say touch my brain technically. And this is my favorite quote. And it says, there is technically no future in any job. There is no future in any job, but the future lies in the man, or we can say woman. Of course, the future lies in the person who holds the job. So there is no future in any job, but the future lies in the person who holds the job. What it means, it technically says that actually the person who is performing that job, that matters. So there are doctors who are earning 50,000 per month, and there are doctors earning 5 lakh per month and even 50 lakh rupees per month, and they all have same MBBS degree, might be from the same college. But how it happens, because it's important that how you explore your job, your opportunities. There are also CAs, those are working for 1 lakh rupees per month, and there are also the CAs, those are working for 10 lakh rupees per month, or maybe crores earning in a month. So our degree is same. Our profession gives us the same opportunities to everyone. So it depends upon you how you explore your profession, your job, etc. You know what is common between you, me, and Ambani? Ambani is the richest person in our country. So we, I, you all, and he, we share one same thing that is exactly same between all of us. That is 24 hours in a day. So he actually explored those 24 hours in that manner that he became so rich. He have everything. He's technically managing a lot of companies. The richest person. And exactly the same time you have. A student of a CA who technically achieve a rank in examination, and you, we all have same thing in common, that is 24 hours. So what the way he explored these 24 hours, that matters. So if somebody is sleeping for 10 hours in a day and then study for only 4 hours, and he or she cannot achieve the goal. But if somebody is actually managing those 24 hours in a manner so that he or she can achieve his or her dream, so that's what matters. So never think that you have something less. So what money has, you also have. So definitely you should understand how to explore your study, how to explore your time, how to use in that manner so you can achieve your goal as soon as possible. That is for you. Let's see. Good evening. A lot of good evenings are here. So Yogita is okay. Good evening. Hitesh, good evening. Janendra Kumar, good evening. How is my health? My health is fine, Janin. Thank you for asking. Okay, solved all question. Good. Janisha is asking, good evening. Yes, I am fine. Good evening. Aniket, good evening. Srivastav, Venka Kumari, good evening. Mahadev Bhardwaj, good evening. Soumya Gupta, good evening. Matanjali, Garbit, good evening. Rafiq Bhai Menon, good evening. Okay, it's a very complicated name. Ira Guntala Surup Singh, good evening. Okay, everybody, yeah, good evening. Matanjali is asking how I am. I am fine, Matanjali. Perfectly all right. Shruti, good evening, good evening, good evening. I am doing well. Yes. Pooja, I am doing well. Himanshu Gupta, good evening. Subrato Patro, good evening. Akashni, good evening. Okay, what is the treatment of short-term cap gain received in London? Akashni, you are asking about the short-term capital gain received in London for not ordinary resident. So I need to see that question. Uh, what is the treatment for short-term? Can you tell me on which asset that short-term capital gain arise? Either is it on domestic company shares, etc. So please write me on which things the capital gain arise for not ordinary resident. So I'll answer you, of course. Next is good evening, Jaspreet. Good evening, good evening, good evening. Okay, everybody, a very good evening to you again. And let's move on to our topic today. We have a huge topic to complete. But before that, let's start an MCQ test. Let me see who are ready for MCQ test. Please be ready with a paper, pen, or calculator so we can initiate our test number 3, which is for residential status provision. We will do it fast because I have a lot of topic to cover today. So this is our test number 3. I hope you all are ready for this. Okay, this is our question number 1. This test is going to be little fast from previous because we need to complete a lot of questions. This is our moment of truth, and let's do this. Question number 1. Please read and send me answer as soon as possible. After the MCQ, we will start our today's chapter, that is chapter number 3. Naga is asking, sir, is this chapter is your last lecture, sir? Yes, this is my last session, Naga. Question number 1, you need to answer it. Ready for the answer? Okay, so answer is Madhuri is saying C, Jayendra Kumar saying C, Yogita is saying C. Okay, again C, Manika is saying C, Ayush is saying C, Riyan Saksen is saying C, Menon Rafiq is saying C, Pooja is saying D. No, D is the wrong answer. The correct answer is C. We find out the residential status of previous year of every person, which is applicable for his assessment year taxability, but status of previous year will be taken for the purpose of Income Tax Act 1961. Okay, this is question number 2. Let's see, question number 2. Akash is saying sale of shares of an Indian company. So if there is Indian company, that gain will be taxable for not ordinary resident also. Question number 2. Okay, Pooja is saying I sent the wrong answer previously by mistake, sir. Okay, no issue. Question number 2. Taxpayer are classified into how many broad categories on the basis of their residential status? Question number 2. Correct answer is somebody said say. Name Jayendra is saying C. Madhuri is saying again C. Amrit Pal is C. Poonam Sharma C. Hitesh Jain C. Mahadev again C. Pooja is saying B. Matanjali is saying C. Rekha is C. Joshi Suyog saying B. Priyansh is saying B. Okay. Khushbu is saying C. Pooja is saying D. Okay. Ayush. Okay. Good evening. Thank you, sir. You're a good mentor and faculty. Thank you so much. The correct answer is C. 3. I've told you in the notes also it has been classified as described in the starting of this chapter that there are mainly three broad categories, and that is RR, NOR, ROR, and NR. Of course, question number 3. This is very important, very tricky. Please read it carefully and then only answer. Question number 3 is very, very tricky. Okay. To claim the status of not ordinary resident for individual. Question number 3. To claim the status of not ordinary resident. What we say, resident and not ordinary resident. R, NOR for individual. What he needs to do? Question 3. What is the correct answer? Let's see. Somebody send me the correct answer yet. Joshi Suyo. Okay, my name is Joshi Sahil, but your name coming on online to me, Mr. Joshi Suyo. Okay, no issue, Joshi Sahil. Shreya Shah has some query. Good evening, sir. I have some query regarding last class. Suppose a person who is a non-resident is a 10 lakh outside India and comes to India just for a visit, but before his visit, he opened his bank account with an Indian bank and then he remitted over 10 lakh into that account through a approved channel. Then whether this income will be taxable or not? No, that income is not going to be taxable because he's a non-resident, and if income is not taxed on the basis of received or earned, and it is not received or earned in India, then only taking income with him and remit into a bank account, that's not going to be taxable. Clear? And in the last class, you have taught us to ignore income related to previous year, but in basic concept chapter, you have told that undisclosed income related to previous year will be assessed in that previous year. Yes, that will be taxable as per the specific provision of black money. That will not be taxable as per the normal provision, which is applicable for previous year income. So if we found some income in our previous year, which is related to earlier year, that is black money, it's a special tax rate 78%. So that recovery procedure, taxability procedure for black money is completely different. It will not be categorized in our normal previous year taxability income. And in that format of RNOR, etc., we only consider those income which is going to be taxable as per normal channel, not as a black money. Understood? Okay, third correct answer is B. Shruti is saying B, correct. Miss Nishantini is saying C, wrong. Madhuri is B, correct. The B is the correct answer. Very nice. Those are giving the correct answer. Congratulations. Well done, boys and girls. Question number 4. We need to complete it as soon as possible. Question 4 is also a very tricky question. This is very tricky. Give me the answer after reading it very carefully. Very, very carefully. Question number 4. Let's see what is the correct answer. Somebody is saying A, and that is Vandana is saying A. Vanathi is saying A. Yogita Kavar is saying A. Sumit is saying D. Smriti is saying A. Naga is saying D. Subrat is saying D. Janvi is saying D. Priyansh is saying A. Jaspreet is saying B. Jayanti is saying A. The correct answer is A. And why it is A? Because you are not reading. Those are giving answer other than A, technically not reading condition number B correctly. In the condition number B, it has been written person must be in India for less than. I have done it. This is as less than. It's not more. I have written it less than. But the real condition is for more than 60 days and 365 days or more. So you might be confused that condition A is applicable also in condition B. It is a wrong condition because I've changed more into less. So those are not giving answer A just because they are treating A and B is the condition need to be fulfilled. So they are saying D. D cannot be possible because only basic condition, only two. Those are applicable for this condition. So technically, if you are saying other than A, you are wrong. Understand why? Because I told you, you should technically read the objective very, very, very carefully. I hope you got this now. Okay. Next is question number 4. Read it carefully. It's a question. Technically, Sudeep is a foreign citizen. His father was born in Agra. First of all, you have to check in every question whether exception is applicable or not. So if exception is applicable, then you have to check those exception conditions. We have technically 3 exception conditions. Citizen goes outside India. Citizen or person of Indian origin visit India. Citizen person of Indian origin visit India and having total income exceeding 15 lakh from Indian resources. So initially you need to check whether the exception applicable or not. Then you should solve it further. Vishal is saying, why can the option in question 3 as satisfying one condition, we are not required to satisfy any additional. In question 3, we asked, when can somebody be a not ordinary resident? So for question number 3, we need to satisfy, to become not ordinary resident, Vishal, we have to satisfy one basic condition, that is 182 or 60 plus 365. Only then you will become a resident. And after becoming a resident, if you need to become a resident and not ordinary resident, then you have to fulfill one additional condition also. Then only you will be a resident or not ordinary resident. So question number 5 in front of you. Kindly check and answer me what is the correct answer. I have asked this kind of question earlier also in my class. So what is the correct answer of question number 5? Please write the question number whenever you are answering me, because some students are directly writing the option. I don't know which question answer you are technically giving. So Vikas is saying question number 5, correct answer is saying C. Then Ankit Gupta is saying A. Swaroop Singh is saying A. Poonam is saying A. Mahadev is saying A. Rekha is saying A. A lot of us saying A. The correct answer is technically A, because I've told you, I asked you this kind of question. Sudeep is a foreign citizen. His father was born in Agra in 1961 and mother was born in USA. Grandfather born in Kanpur in 1969. So technically he is a person of Indian origin. So if he come to visit India, the only first condition need to be checked. He came to India on 10th December 2021 for 200 days. So only first condition 182 days need to be checked. And from 10 December 2021, we need to check up to 31st March 2022. So till 10 December 21 up to 31st March 22, he is in India for less than 182 days. So 200 days is he came on 10 December, but we need to check out of that 200 days, how many days he was in India up to 31st December, that is less than 182. So he will be a non-resident. Next question. Question number 6. These are reverse kind of condition. When we discussed about HUF provision for becoming a resident and ordinary resident. So it is kind of that reverse condition. So if somebody needs to be a resident and ordinary resident in India, then out of these four, which both condition or none condition or A or B needs to be satisfied? The correct answer is C. I am not giving you much time because we have to complete our third number chapter. Vishal asking if he does not satisfy one additional condition, then he will be a resident and ordinary resident. So I asked, please read the question carefully, Vishal. I asked when he will be a resident and not ordinary resident. Becoming a NOR, he need to fulfill at least one condition. If he does not, he will be a resident and ordinary resident. Clear? Question number 6, correct answer is C. Question number 7. Quick, please be fast. Pooja is, what are you saying, Pooja? Grandfather was born in 1929 before partition, so he will be a resident by birth. He will be a person of Indian origin only. Please read the provision carefully and then ask. It's a request. Fine? Okay. We need not to check whether Mr. Sudeep is 10 out of 9 because he does not fulfill condition number 1 of basic condition. Then it's irrelevant to check further any condition. He will be a non-resident. That's it. Question number 7. As an Indian citizen who is living in Delhi since 1980, left for Japan on 1/7/19 for employment. He came back to India on 1/1/22 on a visit and stayed for 4 months. His status, what will be the status? Of course, question number 7 says that he is an Indian citizen who left India and now he is coming back to India for visit only, and he is in India for only 4 months. So if some Indian citizens comes back to India for visit, then we only check condition number 1, that is 182 condition. And from January 1/1/2022 till 31st March, the days are less than 182. So question number 7, the correct answer is C. He, Mr. X, will be treated as a non-resident. Today, before ending our class, I'll tell you a simple poem. What I actually made myself when I was studying as a student to motivate myself. It's a very beautiful, I guess, I'll tell you in the end of our class today. So that might be going to motivate you also. It's a very beautiful and very short kind of poem. I'll let you know when we end our class. Okay. So question number 7, correct answer is C. Okay, almost everyone give me the correct answer. Very nice. Next is question number 8. Paresh, a software engineer of ABC Limited, left India on 10th August 21 for the treatment of his wife. For income tax purpose, his registered status will be assessment year 22-23 would be question number 8. Because he left India for treatment of his wife, not for employment or not as a member of an Indian state. So both conditions will be applied. And because he is in India till 10th of August, so April, May, June, July, first condition has not been fulfilled, but he will fulfill condition number 2 because he is leaving India technically for first time. Because no information has been given, so we will treat that he left India for the first time. So in that case, 60 plus 365 days condition has been fulfilled. So technically he will be a resident. We need to further check it also whether it's a non-resident, R, NOR or none of the above. So if you solve this question further, then you will not, he technically be a resident and ordinary resident. When you will solve it further, you will find he will be a resident and ordinary resident. But because that option is not given in the question, so we need to take on option number A. So in MCQ, you should remember, if the exact answer is not there, because in this question, if you will solve it further, you will find the correct answer is resident and ordinary resident. But because there is no such option, then we have to click on the best or the most appropriate answer, and that can be only A, that is a resident. Question number 9. Determine the status of Miss Hasina, a person of Indian origin who came for a visit India on 15th April 21 from Dubai, and she left India on 30th April 20-21. So question number 9 says that she just came for some 15-16 days in India, and a person of Indian origin, so that only first condition will be applicable, and she is not going to fulfill condition number 1, so she will be a non-resident. I'll take your all queries. Those are asking. Let me complete this question number 10 again. Then we will be free. Question 10, a deemed resident will be treated as, we all know a deemed resident, section 6(1)(a) always treated as option number A, that's a resident and not ordinary resident. Now let me see what queries you are asking out of these questions. Rekha is asking question number 8, Paresh is not in India for 22 years, how he resident? What are you asking? Paresh, a software engineer of ABC Limited, left India on 10th August 2021. He's leaving India for the first time, 10th August 21. So condition number 2, basic condition number 2 should be checked, Rekha. Please read the provision and apply them accordingly. Jayendra asking, but in question number 8, information is giving as he's leaving India for the first time. Then how we will assume that? Because he's leaving India for treatment of his wife. Understand? For treatment of his wife. So in the exception case, only the condition is for employment and employee of an Indian ship. So if there is nothing prescribed like this, then you cannot assume assumption according to your convenience. Okay. Raghavan is asking question number 7. What are you asking, Raghavan? Previous year 21-22. So what? He came to India on 19 and he came back to India. He left India on 1/7/19 and came back to India on 1st 22. What is the issue regarding this? Previous year 21-22 is from 1st April 21 till 31st March 22. You are technically asking me the wrong question, Raghavan. Okay. So now we are moving on to our fresh topic of today, that is chapter number 3. It is a very important chapter for you, numerical as well as theoretical. Fine. So there's a first of all the chapter quotation for you all. If you work hard, you will not win immediately, but definitely. And that is really, really, really true. If you work hard, maybe you will success slightly late, but you will definitely going to be success in your life. So the topic is income which do not form part of total income, chapter number 3. We have types of income. Those are taxable income. So taxable incomes are those income on which we need to pay tax, of course, and those are exempted income on which we need not to pay tax. There can be two kinds of exempted income. One is partially exempted income and one is total exempted income. Partially exempted income means income those are partly taxable and partly exempted. And those income, those are wholly exempted means that we need not to pay any tax on those income. We will discuss these kinds of income one by one in this chapter. So what is the chapter overview? What is the chapter in which what we are going to study? That is fully exempted income like agricultural, and these are partially exempted income. Those are leave, travel, etc. Now there's one term that is called exemption and there is one term that is called deduction. There is a slightly and very important difference between two of them. Exempted incomes are those income, those covered under section 10 generally. And those are not going to include in assessee's gross total income. So income, those are not going to include in the income. Those are exempted before including in the category of gross total income. Those are called exempted income, like agricultural income. If I have total 20 lakh rupees income, and out of which 5 lakh rupees is agricultural income, and if it is exempted, then that 5 lakh rupees income will not be considered as my income category. So that will not going to be shown. in my gross total income. It will be exempted as income and not going to be included in my gross total income. But deduction is a different criteria. If your income has eligible for some deduction, then firstly, it will be included in your gross total income. So those expenses create deduction that firstly going to include in your income, and after that it will be allowed as a deduction, as a subtraction. So it will form part of your income, but after it will be allowed as a deduction. How it happens? Let me explain you with the help of a simple diagram. Like for example, Mr. A has 10 lakh rupees income, out of which 3 lakh rupees gifts from his father, and which is exempted as per income tax act. So now if I include Mr. A income, then I will write his income as 7 lakh rupees only. For example, this is Mr. A's income from other source. 10 lakh rupees was income from other source, out of which 3 lakh was gift, which has been given by Mr. A's father to him. And that is exempted as per the provision for the compliances. Then in income from other source head, I will only write income of rupees 7 lakh. So my GTI will also be, if there is no other income, my GTI will also be 7 lakh rupees. Understood? Now imagine there is interest income also 20,000 rupees. In this 7 lakh rupees, there is interest income 20,000 rupees, which is eligible for deduction under section 80 TTA. Suppose, which is eligible for deduction under section 80 TTA, only up to rupees 10,000 rupees deduction is eligible. What is the meaning of deduction? What is section 80 TTA? You will be read in future chapter of deduction. So suppose in these 7 lakh rupees, 20,000 rupees is interest income, and out of this 20,000, a deduction is eligible, that is section 80 TTA, that is 10,000. So now my total income will be 6,90,000. So which is allowed as deduction has an implication that firstly it will be part of your income, but after GTI it will be deducted from your income. And if some income is falling in the category of exempted income, then it will not form part of your GTI at all. Understand? So what is our chapter? Our chapter relates to deduction, not deduction, but exempted income. So whatever incomes we are going to study in this chapter, those will not form part of our GTI. That will be excluded before calculate the GTI. One by one, we will discuss it. So that is the difference between deduction and exemption. You can read it. Exemptions which are discussed under the relevant chapter. There are two kinds of exemption, but one is general exemption, which we will cover in this chapter number 3. And there are certain specific exempted income which are related to a specific topic, like salary income has some exemption, like gratuity exemption, like leave encashment exemption, etc. House rent allowance exemption, etc. There is other chapter also, those have their exemption connected to that particular chapter. So those kind of exemption you will be reading when you complete or you are going to read those chapters. In chapter number 3, we generally consider or discuss those exemptions. Those are general exemption. In this chapter, we are going to study the provisions of section 10, which enumerate the various categories of income that are exempt from tax. Student may note that in this chapter only some of the exemption are listed. Okay. Some of the exemption are listed out in the chapter overview are discussed. The remaining exemption are being discussed in the respective chapter as shown here. There are certain exemption which is related to salary chapter. You are going to read them in salary chapter. Then again, capital gain exemptions, income from other source exemption, income from person included in assessee total income, that is clubbing chapter, deduction, etc. So this is our topic. these kinds of exemption now we are going to discuss one by one. And first one is the most important, that is agricultural income. This is a very basic one. Initially, we also discussed about the agricultural income, and I have explained it to you that technically agriculture income is exempt in our country. The taxability power of agriculture income rests with the state government. This is also be discussed in our first topic, first chapter. So now we will discuss what is the meaning of agriculture income. In general sense, we think when we discuss about the agriculture income, we imagine that there is a farmer who is farming in his land and earning agriculture produce, producing agriculture produce, and that agriculture produce he is selling in the market, and whatever he is getting, that is his agricultural income. That is absolutely right. You are exactly thinking right. But that's not complete the definition. Technically, we have four kinds of income under income tax. And these four kinds or four category or four types of income, we consider them as agricultural income if they fulfill the specific norms, what we are going to study. So these four kind of category of income will be treated as agricultural income and will be exempt under section 10(1) if these are going to fulfill the norms which has been prescribed. So agricultural income exempt from income tax, done. But agricultural income is exempt from income tax only if it is as per section 2(1)(a), what we are going to discuss. So those four categories has been defined under section 2(1)(a), and if it is satisfying section 2(1)(a) definition, then section 10(1) will exempt this agricultural income. So we are moving on to section 2(1)(a), which is going to explain you the categories of agricultural income under Income Tax Act. Okay. So here we go. That is agricultural income means. I already explained to you that we will take all your query after 30-40 minutes, of course. Okay, so let's make me a diagram, simple diagram that will really going to help you in understanding all the provisions. So section 2(1)(a) explain four categories of agricultural income. There are technically four categories of agricultural income. First, say if there is any rent or revenue. If there is any rent or revenue from an agricultural land, it should be situated in India. If you have an agricultural income from outside India, then it's not going to be treated as an agricultural income because the land should be situated in India. So there are three conditions in category A. We can say rent or revenue income. It should be from an agricultural land and the land should be situated in India. So what is the meaning of rent and revenue? Revenue prescribed the same what we imagine about the agricultural income. That if I have an agricultural land and I am doing farming on it and get the agricultural produce and sell it into the market and get the money. So that income is called revenue income. That is simple definition of agricultural, what we technically know from since birth. That if there is some farmer who is farming on a land and earning some agriculture producing and then earning income out of it, that is going to be agriculture income and that is going to be exempt. We all know that. That's the simplest definition of revenue meaning of agriculture income. But there's a new concept which is called rental income will also be treated as an agricultural income and will be exempted in the hands of landlord. It's a new thing. It says that suppose Mr. A have an agricultural land, but he is not interested in farming. He resides in a city. He has agricultural land in a village area. So what he does, he let out this land to a farmer for farming. Now that farmer will pay rent to Mr. A. So if I have agricultural land and I let out it for only farming purpose, in that case, if Mr. A receive rent, then in that case, that rent will also be treated as Mr. A agricultural income and going to be exempted. Whether rent paid by the tenant in monetary terms or non-monetary terms also. If the farmer pays monetary oblique non-monetary, whether the farmer paid this rent in monetary form or he can transfer his agriculture produce up to the value of the rent to Mr. A, and Mr. A can sell that agriculture produce in market and get the money. In that case also, that rental income will be treated as Mr. A agricultural income. Now again, what the farmer is doing, he's producing agriculture produce and he's also going to sell it in market. Then his income also be as an agricultural income as a category of revenue, this one. So revenue can be earned by yourself, and if I let out my agricultural land to a farmer, so whatever he will earn out of his agriculture produce also exempt as agricultural income because that is a revenue. And whatever he pays to me as a rent, that is exempted for me as an agricultural income because it's a rent. So condition is, say if there is an agricultural land and if you have rental income or revenue income, then it's going to be exempted. It's going to be treated as agricultural income. Clear? That was condition number A. Condition B, or we can say category B. Category B say if you are a nursery business, if you are in a nursery business, we all know the meaning of nursery business, that a place from where small plants etc. being traded. So if you are running a nursery business, even that income of a nursery business will be treated as agricultural income, whether the basic operation have been carried out on by you or not. So even if you are trading the plants as a nursery business, then the income of that nursery business is going to be treated as agricultural income. Clear? C case. It says if you have a farmhouse, if you have a farmhouse, you know the farmhouse, fine. And if I have a farmhouse and I let it out it to a farmer. So now I'll get the rent also. So if I am getting rent from an agricultural land, which is used by farmer for farming, suppose in the A case, if I let out my land to the farmer, but he does not use it for farming, he use it for some other purpose, then my rent is going to be taxable. It should be used for farming also. In the same case, if I have a farmhouse and I let out that farmhouse to a farmer, and if he used that farmhouse for agricultural purpose, then only the rent is also be treated as agricultural income. But there are certain 4 conditions you need to be fulfilled for category number 3. For category number 3, there are specifically 4 conditions. Condition number 1 says that farmhouse should be within the agricultural land boundary. That farmhouse should be situated within the vicinity of agricultural land. So on the land on which the farmer is doing the farming, in the same within the boundary of that land, that farmhouse should be situated. Condition number 1. It has been prescribed in the notes. Do not worry. Everything has been written in the notes. Condition number 2 says that farmhouse should be used by the farmer. Of course, if I let out this farmhouse to some other person who is not using it for farming, again the rent is going to be taxable. Okay. Third case, the farmer should use this farmhouse as a storehouse for his agricultural produce or for his residential purpose. He should live in this farmhouse and take care of his farming because the farmhouse is situated within the agricultural land. Or he can use that farmhouse as a storehouse. So farmer should use it for a storehouse or for his residential purpose. So these purposes will be treated as related to farming. And the last condition, this farmhouse should be outside the urban area. This farmhouse should be outside the urban area. It should be in the rural area. Farmhouse situation should be in the rural area, not in urban area. Clear? That was condition number C. The D case is called composite business case. We call it composite business case. That is a hybrid. This says if there is some business, if there is some category of business in which agricultural activity as well as non-agricultural activity both are included. There are some business, those are pure agricultural business. For example, I am producing sugarcane. And what is my business? I produce the sugarcane and I sell it into the market like sugarcane. So that is called pure agricultural activities. I am producing potatoes and I am selling it in the market. That is a pure agricultural activity. But there are some business or some farmer or some businessmen, those technically into the both activity. Now understand, if I am producing sugarcane and making sugar out of it and then selling the sugar into the market. So technically now I am into the two activities. One is agricultural, or you can say farming, and other is you can call manufacturing. So if I'm doing both activities, that kind of business is called composite business. If I am producing potatoes and then after making the wafers or chips, I am selling into the market. So technically again, I am in the business of composite business. If I am producing manufacturing tea plants and then after processing, I am making tea and selling into the market or either coffee or etc. So there are a lot of agricultural business. In that case, the businessman is doing both activities, agricultural and non-agricultural activities. In this case, we need to find what is the agricultural income and what is the non-agricultural income. What is this agricultural income is going to be exempted, and what will fall in the non-agricultural activity, that is going to be taxable. How we will find the agricultural portion and how we will find the non-agricultural portion, that we will discuss in detail when we will move on to the point number D in our notes. So section 2 and explain 4 categories of income will be technically considered as agricultural income. Okay, let's move on to the notes and we will read it all these provisions one by one. I've explained you in a easy manner, so you will understand each and everything very easily. Matanjali is asking full form of GTI. What are you asking? We are in our fifth session, Matanjali. GTI is gross total income. I guess you are not actually watching the initial classes. Please be focused. Don't do this with yourself, not with me. Whatever you are doing, if you are not studying properly, if you are not taking classes seriously, if you are not pursuing this course seriously, let me tell you, you are not doing wrong with anyone. Not with your parents, not with me, not with anyone. You are technically doing wrong with yourself. And you will feel it after a time when your friends will move on the CA final level or maybe become CA, and you will not. So never give any excuse if we are not able to complete this course, because we all know from inside that yes, we are not doing it properly. So please be focused. These kind of questions really makes me feel very awkward, because what is a GTI means, that is something I cannot explain now. Okay. So agriculture income, point number 1, any rent or revenue derived from land which is situated in India and used for agricultural purpose. That was the first point we have discussed. Any rent and revenue, both ways. You can read that. The term agriculture means definition of agriculture. You can read it. There's nothing like this. Nothing difficult. It's just reading terms. Okay. Process ordinarily employed to render the product fit to be taken to the market. This point number 2, we are reading in the first category, but technically it is also connected with fourth category. There are two kind of process. One is the manufacturing, one is the production of agriculture produce, and the other is to making it fit marketable, like wrapping, like packaging, etc. So sometimes to make the agriculture produce a sellable commodity, it becomes necessary to perform some kind of process on the produce. The income from the process employed to render the produce fit to be taken to the market would be agricultural income. So if you are not converting the nature of agriculture produce, like you are not making sugarcane into sugar, you are just packing the sugarcane in a different packet, etc. That activity will remain agriculture activity until you are not changing the nature of it. However, it must be a process ordinarily employed by the cultivator or receiver of rent in kind, and the process must be applied to make the product fit to be taken to the market. So if the packaging is there, which is mandatory to sell the product in the market, in that case, the case will fall in only category A. Case number D will be applicable when you change the product nature. Like you are making tea leaves into tea. You are technically making sugar into sugar cane. Sugar cane into sugar. Okay. So any income from the sale of any produce to the cultivator or receiver of rent in kind is agriculture income if it is that activity which is making it marketable and not changing the nature. So point number 1, 2, 3. All these three are the part of our A point category, that is pure agricultural activity, rental income or revenue income. Now point number 2 is our category number C, which is for income from farmhouse, from farm building. So farm building means these are the 4 conditions I was talking about. The building should be on the immediate vicinity of the agricultural land. Vicinity means boundary. So the farmhouse should be within the boundary of the agricultural land. Building should be occupied by the cultivator, farmer, whatever you can. It should be used by the cultivator or farmer. The land is situated outside the urban area. That means that land should be in the rural area. Cultivator should require the building as dwelling house or storehouse. Dwelling house means residential purpose, or it should be used as storehouse. Remember, all 4 conditions should be fulfilled. Only that the rental income from that farmhouse will be treated as agriculture income in the hands of the landlord. What is the meaning of urban area? The definition of urban area and rural area has been written down over here. You can read it. It's very simple. The third kind of income, that was nursery operation. Agriculture income includes income from nursery operation. Any income right from sapling or seeding grown in a nursery shall be deemed to be an agriculture income accordingly, irrespective of whether the basic operation have been carried out on land. Such income will be treated as agricultural and will be qualifying for exemption. Last one, that was D category, and I was talking about it, composite business. Any income derived from such land by agricultural operation, including processing of agricultural produce. Now we are doing processing. Processing means some manufacturing activity, some kind of process, some kind of working condition by which we are going to change the nature of it. It also says process of agriculture produce so as to render it fit for market. But there's a difference between a definition of fit for market in point number 1 and point number 4. One is saying that is only packaging, etc. But 4th is going to change the whole process. So the nature, the sellable product will be different. Would income arising from transfer of agricultural land situated in urban area be agricultural income? That is technically connected with the capital gain question. Because we are generally studying in these 4 categories the regular income. So the regular income can be in the nature of rent and revenue. We have discussed in category A. The regular income can be in the nursery business. We have discussed farmhouse rent. We have discussed and the composite business. That is also a regular income. But if I have an agricultural land in urban area and if I am going to sell it, will it be going to be taxable or exempted? The correct answer is it's going to be taxable. You will read it detail in capital gain chapter. But for the time being, if agricultural land in urban area and if you sell it, you're going to pay tax on it. But if your agricultural land in rural area, then it's going to be exempted under section provisions of the capital gain law. Indirect connection with land. We have seen above that agriculture income is exempt whether it is received by the tiller or the landlord. However, non-agriculture income does not become agriculture merely on account of its indirect connection with the land. The following examples will illustrate the above point. For example, there is an agricultural business, a company XYZ Limited is into the agriculture business and it has only having agriculture income. It produces sugarcane and sell into the market. So the income earned by ABC Limited is going to be exempted because that is called in the category A. Clear? Now understand, if I am working in ABC Limited as an employee and getting salary of rupees 5 lakh rupees per month. Suppose, so I am working as an employee in ABC Limited and getting salary of rupees 5 lakh rupees per month. So will that salary is going to be exempted or not? Listen carefully my question again. I need that answer. You are going to send me the answer. Listen what I am saying. ABC Limited is a company which is dealing only agricultural produce. They produce sugarcane and sell it to the market. Their net profit is 100% exempt from tax, suppose. Okay. Now, I am an employee of ABC Limited and I am getting 5 lakh rupees per month as a salary. And what I am saying, because I am an employee of ABC Limited, which is in the agriculture business. So my salary income is also agriculture income and it should be exempted as agricultural income. So whether it's going to be exempted or not, whether it will be treated as agriculture income or not, kindly send me the answer now. Listen me carefully. You should not answer without applying the provision. What is the correct way of answer? Let me tell you. There are 3 steps of giving answer. First one, understand the question. Second, implement the provision or remember the provision, what you have already studied about that problem. And then after implementing, send the answer. Generally, we need to hear it. First one, the question, we need to hear it. Then our mind, the brain should understand with the help of provision. And then we should speak. This is the practically I can tell you, I'm telling you the way of answering anything. Here, brain, mouth, but we skip the brain part. We generally hear an answer. So the chances of being wrong will be increased. So if I'm questioning you this question, that whether salary will be treated as agriculture income, you heard it clear? Now your brain should apply it like this. How it will apply? That I have explained you 4 category of income. You should think about the provision. I have explained you 4 category of income. You should think about it. That is the question fall in A, B, C or D. If you apply question like this of any question, listen the question, understand the question, then do not answer it. Just apply with the help of provision. So what you should do? What I asked you, you should put in the provision. Whether my question is fall in A, is it rent revenue? Is it nursery business? Is it farmhouse rent? Is it composite business? So my question does fall in any of them. If yes, your answer will be yes. And if no, your answer, you know what should be. So this is the correct process for answering every question. We generally skip the brain part. Hear and speak. Stop that. You should hear it, then think about it, and then proceed. So now you can answer me, and I know 100% student can give me the correct answer now. Send me the correct answer. I'm waiting for your correct answer. That salary income will be a agriculture income or not? I told you. Everybody is almost giving the correct answer. Only those can give me a wrong answer, which those send the answer before understanding the concept, what I just explained to you. Very well. Everybody, almost everybody. There is not even a single student who sent me the wrong answer. Very nice. So it is not an agricultural income because it is not fall in the category what I have told you. What I am actually going to make you understand is the law. So law say there are 4 categories. That's it. So if my question is not fall in those 4 categories, then I know what is the answer. So always whenever you answer any question, just follow this process, hear it, understand it, apply the provisions. The most important thing you should think about the provision. What is the provision? Okay, that was the provision. Is it applying that? If yes, then only answer. Okay. So these examples are on the basis of more examples which are going to explain you the agriculture income or non-agriculture income. Now you can answer all of them examples correctly. I can assure you. Like X was the managing agent of a company. He was entitled for a commission at the rate of 10% per annum on the annual net profits of the company. A part of the company's income was agricultural income. X claimed that since his remuneration was calculated with reference to income of the company, part of which was the agriculture income, such part of commission as was proportionate to the agriculture income was exempt from income tax. So should it be agriculture income? We all know that these kind of provision was not in category A, B or C or D. So that's the Mr. X is saying wrong. Even with the help of this process, you can answer exactly same in the examination. The part of examination, if there is a question and you have to answer it. So first of all, the analysis of the question, we need to write whatever the question is given. Then we need to apply the provision. What is the provision? So whatever the brain says, You have to write in the examination that this is the provision. And the third is that's called conclusion. This is the same way you need to answer your question in the examination. Problem analysis or fact of the case, first point. Second is provisions or the implications or the provisions we have. And the third is technically the conclusion. That is my answer. So whenever you will apply your answers like this, probably they will be correct. Why own 100 acres of agricultural land, a part of which was used as pasture grassland for cows? The land were purely maintained for manuring and other purpose connected with agriculture. And only the surplus milk after satisfying the assessee's needs was sold. The question arose whether income from such sale of milk was agricultural income. So, is there anything regarding milk in was a category? Agricultural income only those income which has technically including farming or anything which is connected directly to the agricultural activities. So milk we receive from cow, etc. That is not agricultural income, so that is not going to be exempted. We should try example number 6 also like this. There is a concept also that examples of agricultural income we have, and we have examples of non-agricultural. These are more important than the examples of agricultural income. So you should understand agricultural income has one direct connection with something like tree, plants, etc. And there is one more important thing. If there is any natural growing, understand? Like in the rainy season, there is grass in front of our house, in our park, etc. Natural. We do not technically farm that. We do not technically plant them. Still, so if there is any naturally growing of any agricultural plant, etc., and if somebody is going to sell it into the market, then that will be not treated as his or her agricultural income. That is a very important thing. Naturally growing things which has not been produced by us, that is not going to be treated as agricultural income. For example, if my neighbor has a house and in his house there is a lemon tree. So what I did, I steal the lemons from out of that tree and sold into the market. So that is not going to be treated as my agricultural income, because for becoming that thing an agricultural income, the effort must be done by us. So naturally grown cattle crop, etc. will not be treated as agricultural income. That is a very, very important definition, and here is the provision regarding it. Income from breeding of livestock, income from poultry farming, income from fisheries, income from dairy farming. These are not be treated as agricultural income. Example number 6, what we were talking about in regard to forest trees of spontaneous growth which grow on the soil unaided by any human skills. So if there is a forest, we went there and we cut the trees or plants, etc., and we sell into the market, that it's an agriculture produce. That is not going to be treated as our agricultural income. Even the operations in the nature of forestry operation performed by SSC may have the effect of nursing and foresting the growth of such forestry. It cannot constitute agricultural operation. Understand? Now this is the most important topic of this exempted income. That is integration of agricultural income with non-agricultural. This is the numerical topic which is directly connected to the agricultural income provision. And I hope you all remembered the basic concept rate of tax provision, because in this topic we need to calculate tax on agricultural income with non-agricultural income. Now what is the problem? The problem is that government says that agricultural income has been exempted initially. But technically there are two kinds of farmers in our country. One is which is called pure farmer. He is only having agricultural income and do not have any other income. So if Mr. A is earning 50 lakh rupees out of his agricultural income and do not have any other taxable income, then he needs not to pay a single rupee of tax to the government, because agricultural income is exempted. But there are one more kind of farmer who have agricultural income as well as they are running other business also. as well as they might have rental income from house property. They might have capital gain also. They might have interest income also. So one is those kind of category of farmers, those having only agricultural income and does not have any other taxable income. Got it? And other farmers, that kind of farmers, those have agricultural as well as some other income taxable also. So in that case, government actually made a new concept, and that is called integration of agricultural income with non-agricultural income. Integration means clubbing. Integration means addition. Integration means consolidation. Integration means combined. So if there is those kind of category of farmer, this is applicable only for those farmers, those have agricultural as well as non-agricultural income. If there is a farmer who has 1 crore rupees income only from agricultural sources and only agricultural income, his tax liability will be 0. But if there is some farmer who have agricultural as well as non-agricultural, in that case, integration provision will apply. And we need to calculate tax in a different manner. How and what are the conditions of this applicability? Remember, this kind of numerical can be asked in examination regarding the integration provision. This is very, very important topic from chapter number 3 and a very interesting also. You can see with the help of mathematics, income tax, technically taxable agricultural income also for those farmers, second category person. Even it is said that agricultural income is exempt, still it is exempted, but they have a trick. By the help of that trick, they technically taxable agriculture income also. How it happened? We will discuss. First of all, we need to see when this provision will apply. What are the conditions when integration provision will apply? So applicability only for individual. First of case, it is applicable only for individual, HUF, AOP, BOY and HAP. That means for slab rate person. These are only category which have exemption limit, basic exemption limit and slab rate. This is not applicable for partnership firm, company, LLP, etc. So if in question, a company has both kind of income, agricultural as well as non-agricultural, integration provision will not apply. So applicable only for individual, HUF, AOP, BOI, AJP. Second condition you need to fulfill, all three conditions should be fulfilled. That agriculture income must exceed 5,000 rupees. It says your agriculture income must be more than 5,000 rupees. It should be more than 5,000. And your non-agricultural income, that means taxable income, should exceed at least maximum amount not chargeable to tax. That is basic exemption limit. It should be exceed 2,50,000. If a senior citizen, then more than 3 lakh. If a super senior citizen, it should be exceeding 5 lakh as the case. So if you are an individual, HUF, AOP, BOI, AJP, you have agriculture income more than 5,000. You have non-agriculture income more than your exemption limit. Then these provision will apply. And if these provision apply, then how integration will be done? This is the way how we will technically apply these provisions. We have 3 steps, 3 fixed steps. Computation of tax on total income. Then computation of tax on agriculture plus exemption limit income. Then step number 3, that will be your tax liability, etc. Let me tell you, make this understand with the help of an example. So we all know that integration provision. We all know there are 2 kinds of farmers. So those are pure farmers, whole income is exempted. And those who have other income also, only in that case integration provision will applicable. So condition is, it should be applicable only case of an individual, HUF, AOP, BOI. After the example, you will understand why it is not applicable on company, partnership, etc. Then condition number 2 says, your agricultural income must exceed at least 5,000 rupees. And condition 3 says, your other income, other than agricultural income, should exceed 2.5 lakh, 3 lakh or 5 lakh as the case. Now here's a question. If I'm writing down that there is Mr. A, aged 40-year, resident in India, having agriculture income of 10 lakh and having non-agricultural income of 20 lakh. Calculate tax. Okay. Now imagine if this provision is not being made by the income tax. First of all, I am calculating tax assuming there is no integration provision is in India. Fine, we will assume then there is no integration provision in India. So if there is no integration provision, then agriculture income will be exempt. And only 20 lakh need to be taxable as per the provision of slab rate. So 20 lakh rupees, first 2,50,000 exempt, next 2,50,000 5% rate, balance 5 lakh will be 20% rate, and balance left 10 lakh going to be taxable at 30% rate. So technically we have 4,12,500 tax. If I'll calculate tax on this, then it will be 4,12,500. Again, rebate will not be applicable because up to 5 lakh only rebate. Surcharge will not apply because it's less than 50 lakh. 4% cess will be there. $16,500. So my total tax liability will be 4,29,000. I hope it's clear till now. So this will be the case if there is no integration provision. In examination, you need not to calculate this kind of calculation that there was no integration, then this provision, and now with the help of integration, what will be happen? I am just telling you this because you can understand the difference, what is happened with the help of integration provision. So now with the help of integration provision, the tax liability will be changed. How? Let's see. So there is step number 1. What step number 1 says? Step number 1 says calculate tax after considering agricultural income also taxable. Technically, agricultural income is exempted. But step 1 says, follow what we say, we will exempt it later. But first you need to calculate tax on total income. That means agricultural as well as non-agricultural. So technically you should calculate tax assuming 30 lakhs is your normal income. So we are not going to exempt agriculture income over here. We need to calculate tax on 30 lakh rupees income. As per normal provision, slab rate 2.5 lakh, then 2.5, 12, 10%, 5%, then 20, and then 30%. So on 20 lakh, 30% 6 lakh and 1,12,500. So total tax will be 7,12,500 if we assume that agriculture income is also taxable. Okay. Rebate provision will not be applicable. Now, in case of integration, rebate will be applicable after step number 3. Even in this question, rebate can't be applicable, but even if this is less than 5 lakh, rebate will be applied after step number 2. So rebate is not applicable right now because we will applicable rebate after step number 2. So surcharge can be applicable. So rebate is not applicable. I am not saying this crossed because rebate will apply after step 3, but surcharge is not applicable because it's less than 50 lakh rupees. If it's more than 50 lakh, I am going to apply surcharge over here. So this is not applicable. This is surcharge. Cess will be always applicable after third step. So in integration provision, rebate and cess will be applied after step number 2 when we will on third step. Only after that, rebate concept and surcharge will be, cess will be applicable. So on step number 1, only tax, or if surcharge applicable, we will apply it, but cess and rebate will be after step number 2. So this will be my tax technically. But this is wrong because income tax says that agriculture income is exempt from tax. So how you can charge tax on 10 lakh rupees, what we have included in the step 1. So department says, just patience, we are now going to deduct the tax of agricultural income. We have charged tax on agricultural income wrongly in step number 1. I accept it. We accept it. So now what we will do? We will deduct the tax of agricultural income out of the tax of this total income. So we have imposed tax on 30 lakh rupees. Now what we will do? We will deduct the tax on agricultural income out of this tax. So if, imagine what is happening, just try to understand what brilliant concept is this. So we apply tax on 30 lakh rupees, 7,12,500. Farmer opposed, this is wrong because you said agriculture income is exempt from tax. How it matters if we are those farmer having agriculture and non-agriculture? Because agriculture income exempt, so you should exempt our agriculture income. So department say, okay, we will do one thing. We have calculated tax on 30 lakh rupees, including your agriculture income. That is 7,12,500. Now I will deduct the tax of 10 lakh rupees, what we have included in your 30 lakh rupees tax. Now we will calculate tax on 10 lakh rupees and deduct it out of 7,12,500. So if out of 30 lakh rupees tax, I deducted 10 lakh rupees tax. So whatever will remain the tax is of rupees 20 lakh rupees. Simple maths. 30 lakh rupees tax deducted 10 lakh rupees tax. So remaining will be 20 lakh rupees tax. Done. So you're exempted. You need to pay tax on 20 lakh only. Step number 3. So farmer said, okay, done. But department has done something very interesting, because what will happen now? So in step number 2, department say, now you should calculate tax on agricultural income plus exemption limit. This is fixed concept. Please do not get confused. Now you need to calculate tax on agricultural income and exemption limit, which is applicable on this person. It might be 2.5 lakh, 3 lakh or 5 lakh, depend upon the case. So this case exemption limit is 2.5 lakh. So agriculture income was 10 lakh and exemption limit is 2.5 lakh. So department said, now do one thing, calculate tax on 12.5 lakh rupees and we will deduct it from here. So now we will calculate tax on 12. Now assume that income is only 12.5 lakh rupees and just calculate tax simply. Now some of you might be thinking, okay, now 12.5 lakh, when we will calculate tax on 12.5 lakh, then what will happen? We need to deduct again 2.5 lakh rupees exemption. I am going to calculate tax on this 12.5 lakh as general simple provision. 2.5 lakh basic exemption again, nil. Then balance 2.5 lakh is 5% taxable. Balance 5 lakh 20% taxable, and remaining 2.5 lakh is 30% taxable. I need to calculate tax like this. You might be thinking, when we need to deduct 2.5 lakh again, why we add it? But trust me, students, trust me. If you will directly calculate tax on 10 lakh rupees agricultural income, then you will wrongly or in hurry or by mistaken, what you will do? You will deduct 2.5 out of this again. So you won't do this mistake. This is the provision. You always follow this. Do not go for shortcut. This is the long cut method. First step say calculate normal tax on 30 lakh rupees income, agriculture plus non-agriculture. And tax, step number 2 says you should calculate normal tax now on agriculture plus exemption limit. So 12.5 lakh rupees your exemption total income. Now we need to calculate tax again upon 2.5. So 2.5 will be exempt and 10 lakh rupees tax will be calculated and need to be deducted. If you want to take 2.5 lakh here, you might doing a mistake. You will take 10 lakh and again going to deduct 2.5 lakh exemption. So tax will be on 7.5 lakh. That will be wrong. So please do not go for any shortcut. Please trust me. Believe me, you have to do it like this. It's very simple. Just agriculture income, add exemption limit. This is your income. Now just calculate tax normally on this. It will come This will be 1,87,500. Again, rebate we will not apply. I told you in that case also rebate is not applicable already because income exceeding 5 lakh. But even if it is less than 5 lakh, you would not apply rebate. That will be applicable if it is applying in the question after step number 2 only. Surcharge not applicable because income is less than 50 lakh rupees, and again after step number 2 if it is applicable. So now imagine what income tax done. They said that we calculate tax on your 30 lakh rupees income, which is wrong. We accept this is wrong. So now for that mistake, we are technically deducting the tax of rupees 10 lakh rupees income, which is your agriculture income, which is included in this wrongly. So after deduction, step number 3 say step 1 minus step 2. Very simple. Step 1 minus step 2 tax, and that will come 5,25,000. Now we can see whether rebate is applicable. No, because income is exceeding 5 lakh rupees. Which income we need to take for the purpose of rebate? We need to check the non-agricultural income in the question. So the non-agricultural income in our question is 20 lakh rupees. So it's exceeding 5 lakh, so rebate cannot be applicable in this case. If non-agriculture is less than 5 lakh, then we can provide rebate over here 12,500. But in this question, because non-agriculture income exceeding 5 lakhs, so rebate cannot be applicable. Surcharge we have already applicable initially, which is not applicable, and now cess 4% will be applied on this. That is 21,000. So now total tax will be 5,46,000. Now you understand what happened exactly. If these provisions were not here, then only collection of tax can be 4,29,000. 4,29,000 including cess. And with the help of this provision only, we are now collecting tax of rupees 5,46,000, which is technically 1,17,000 more than our this tax. We just did the same thing as per arithmetic. If you understand, then in the first question with no integration provision, what we discussed, with no integration provision, if we calculate tax, so this tax upon 20 lakh rupees income, you can see that. And again, in this case, we calculate tax on 30 lakh, then calculate tax on 10 lakh and deducted tax from 30 lakh income minus the tax of 10 lakhs. So balance is the tax of again 20 lakh rupees income. But we have technically increased our tax by rupees 1,17,000 with the help of this amazing method. You know why it happened? Again, in examination, you need not to show this calculation. No, you just need to solve like this. You need to just answer this is my tax liability. But how it happened? Because when we tax the agriculture income in step number 1, that is 10 plus 20. So when you tax that income, then the slab rate on this applicable at the rate of 30% because this is 20 lakh. So already our 10 lakh limit exhausted. After 10 lakh, the rate is 30%. So technically this agriculture income tax at the rate of 30%, which comes to almost 3 lakh rupees. So in first step, the tax on this 10 lakh is 3 lakh rupees included in 7,12,500. But when we deducted the tax of this 10 lakh rupees income, then some part of it taxed at 5%. Some part of this income is taxed at 20%. And only this part has been taxed at the rate of 30%. When 30% is 10 lakh, when step number 1, but the benefit of deduction is only for 2.5 lakh 30% when we deduct it. So due to the help of or due to the applicability of slab rate, deduction tax liability on 10 lakh is lower than this tax liability when we do the addition of that tax. So that is technically the difference. What technically give the benefit to the income tax department and collection is more. So always there's a fixed provision to solve these kind of question. Step 1, calculate normal tax on agriculture as well as non-agriculture. Just forget that is agriculture income and calculate tax. Rebate, skip it. Cess, skip it. Then calculate tax on fixed agriculture plus exemption limit. Rebate, skip. Cess, skip. Then step 1 minus 2. After step 1 minus 2, you have to see that if non-agriculture income is less than 5 lakh, then we can give the rebate. And if there is no rebate applicability, then cess 4% will be directly applicable, and that will be your final tax liability. That is a very, very interesting topic. Moving on to the provision. These are step number 1, step number 2, step number 3. Note as said the step is in step 2 tax calculation without rebate under section 87A of 12,500 and rebate of 12,500 will be available only after step 3 tax liability if normal tax income up to rupees 5 lakh. Normal tax income means normal taxable income other than agriculture income. If that is up to 5 lakh, then you can provide the rebate provision. Okay, so there's a solved question also of this in the I guess notes. So we will going for a break. After break, I will take your all queries. You can ask me. And after the break, we will resume our next topic of composite income. That was D category. And that is also very, very, very important topic. We will discuss it after the break. So, Mr. Ram, can we go for a break of 10 minutes? Welcome back, everyone. So let me take your queries, what you are asking from me. So this is query from Mukta Vyas. Sir, if I purchase wheat from a farmer and resell them in the market directly, so will this be included in the agriculture income? No. That is a trading. That is not going to be treated as your agricultural income. That is going to be taxable. So if you purchase vegetable from a vegetable shopkeeper, that's going to be taxable for him also, because you are not the manufacturing or producer of that article. Next, if Mukta again asking, sir, if a farmer is involved in more than one agriculture income, will all those be exempted? Yes. If they are all agricultural income, that 100% is going to be exempted. All incomes are going to be exempted from that category. Okay. Next is Miss Anu Gupta asking, so if either one of the provision is not fulfilled, the agriculture and non-agriculture income will be calculated separately. All conditions should be fulfilled. It should be an individual, HUF, AOP, BOI, AJP. Your agriculture income should be more than 5,000 and non-agricultural should be exceeding exemption limit. If any of them not fulfilled, for example, your agriculture income is only 4,000, then integration provision will remove. Then tax will be calculated as per normal provision. Normal, that means agriculture income of 4,000 will be exempted and normally non-agriculture will be liable to tax as per normal provision. As I have explained you in the whiteboard, that without integration provision, then tax will be calculated like that. I guess you all might understand now that why partnership firm company is not included, that integration provision. You know why? Because they do not have slab rate and exemption limit. Even if you apply integration provision in case of a partnership firm, the answer will be same. There is no change. For example, if I'll take an example of a partnership firm, same example. Like there's a partnership firm, and suppose its agriculture income is 10 lakh and non-agriculture income is 20 lakh. And if I'll ask you, let's solve the tax of this. Even if you solve this question with the help of integration or non-integration, the answer will be same. Why? If I'll apply non-integration provision, in that case, this is exempted. I need to calculate tax on non-agriculture income, that is 30% directly, and that is 6 lakh rupees. Fine, surcharge will not be applicable, and 4% cess we can apply on that. So that will be your 24,000 rupees. So your tax liability in case of partnership is 6,24,000. If I'll ask you apply integration provision in this case, what will happen? Step 1 will say calculate tax on 30 lakh rupees. Okay. At the rate of 30%, that will be 9 lakh rupees. Clear? No surcharge applicable. Cess will be applicable later. Step 2 will say now remove the tax of agriculture income. That is 10 lakh. Because there is no exemption limit, so we cannot add agriculture income plus exemption limit. That is 30%, 3 lakh. So what will be step number 3? 6 lakh. Cess apply 24,000. Answer will be same. So that phenomenal trick only applicable if there is slab rate applicability or basic exemption. So if an example, if Mr. A, who is an individual, fine, his agriculture income is 10 lakh. And non-agriculture income is only 2 lakh rupees. Again, it should exceed 2.5 lakh, but it is only 2 lakh rupees. Again, in this case, this concept is not applicable. Because if you calculate tax with the help of integration in this case, the answer will be same. Because this is exempted, and this is again exempted with the help of 2.5 lakh rupees basic exemption limit. So kindly apply integration provision only when all of 3 conditions are fulfilled. If you apply when conditions are not fulfilled, even tax will be same. Even if you apply integration or do not apply integration, there will be no change in tax. Got it? So that was the question. Or okay, whose query was that? 545 Mukta. Okay. Next is clever trick. Yes, income tax is very clever, of course. Technically, department are charging more tax. It should be exempted department. We can't help it. This is a provision we have to follow. Okay. Concept is amazing. Yes, everything is so amazing in this income tax. Okay. Ankit Gupta is asking, so what if non-agricultural income is 10 lakh and agriculture income is within exemption limit? Hence, in this case, the concept of integration apply. Yes, if the non-agriculture is more than 2.5 lakh and agriculture is more than 5,000, then applicable. But if it is reverse, that agriculture is 10 lakh and non-agriculture is less than exemption limit, then this concept will not apply. Even if you try to apply it, the answer will be same. There is no difference in your answer, whether integration apply or not apply. Mahadev saying, but this is taxed indirectly on agriculture income. Yes, you can say that, but we can't help it. Surcharge is always calculated on tax after deducting rebate if applicable. Yes, Ramesh, correct. Okay, Jayendra asking something. Sir, my previous doubt that you noted in previous class of chapter 2, page number 2.16, illustration 0.5c, when rent money received in London and remitted in India later is considered for tax for ROR. How, sir, as you said, all remittance are ignored? Correct. I was correct. While you are reading this remittance word, I told you ignore that. You should solve that question only with this money received in London. That's it. Why you are studying remittance word? I have told this. You should ignore that, means you should not read it. So the question left it only with this value, that rent received in London. That's it. This is the question. And if rent received in London, so whether it is taxable for ORR or not? Yes, because ROR had to pay tax on each and every income, whether received, whether arise, does not matter. It's going to be taxable. So when I said do not read remittance or brought Indian income, you should not read it, because you are reading it. That's why you are confusing. Okay. So, sir, if surcharge is applicable, then will it deduct in step 1 and 2? If surcharge is applicable, then yes, whatever your tax plus surcharge will come in step 1, and whatever your tax and surcharge will come in step number 2. Total tax will be deducted from 1 minus 2. Okay. Why department is doing this is a question we should not ask. Department is department. They can do anything. Okay. Prabhas, sir, that agriculture, non-agriculture income provisions is superb, and on top of that, your explanation made it very easy to understand. Thank you so much. Okay. Himanshu Gupta asking, gain on sale of agricultural land is taxable. I just explained this topic before this agricultural. Yes, if your land is in an urban area, that is going to be taxable. If it is in rural area, not going to be taxable. Detailed provision is in capital gain chapter. Have patience. Shreya is asking, if I let out my farmhouse to a person for residence, but he sublet the farmhouse to a farmer for farming, then whether it will be exempt from total income. In that case, whatever rent you are receiving, that is not going to be exempted, but might be the rent he is receiving that can be exempt. Depends upon the fact of the cases. Sir, why directly 30% on 20 lakh? Ms. Shruti, it's a partnership from case. So partnership tax rate is 30% directly. You should go and read basic chapter 1, class number 2. Next is, what if farmer has a wholesale shop where he sells his produce from farm? He's basically selling in his own shop rather than giving it to wholesaler. That's going to be exempted, of course. If he's selling his produce, that's going to be exempted. Muktavya, sir, when you say rental income or any revenue income, so does it include the capital receipt in the form of rent? Capital receipt in the form of rent, how it's possible? Capital receipt is a one-time receipt. That should be in case of sale, etc. But yeah, it might be happen that you are not taking the rent monthly. If you are taking the rent of a year at once, that is also a rent. Okay. Harsh, sir, in the AOP, there are 2% of different exemption of 2.5 lakh. Oh God, Harsh, what are you asking? AOP has a separate exemption of 2.5 lakh. If there is 5%, then not 2.5 will be clubbed. AOP is 2.5 lakh exemption as a combined personality. That's it. Okay, next. What if we cannot identify which is agriculture income and non-agriculture income? Then department will taxable the whole income. It's your liability to prove what is agriculture and non-agriculture. If not able to prove it, department will consider the whole income as non-agricultural. Okay, and taxable the whole income. Deemed owner means you will read it in income from house property chapter. Deemed owner means which is not a registered owner, but technically income tax assume that person as owner for the purpose of income tax. In short, we can say that global income is taxable in case of ROR. Correct, absolutely correct. Even you are going on Mars. If you are a ROR, and you got opportunity from NASA, and NASA is going to send you on the Mars, and they are saying you have to go to Mars and bringing some rock and sand of Mars, and they technically drop a suitcase with the dollars and rupees on Mars, and they say your money is also there. You have to go there, collect some sands and rocks for us, and your money is also there. You go with the help of a rocket to the Mars and got the money. Even if you got that money from Mars, even you need to pay tax in India, because if you are a ROR, it does not matter. You are in India or in this world or in space or another planet or another Milky Way or another galaxy, does not matter. In any multiverse you need to pay tax in India if you are a resident and ordinary resident. Understand the multiverse? Okay, I hope now it's clear. Okay, what we can identify, I have explained to you. Next is, okay, done. So I have taken all the queries. Now moving on to our topic, and I told you that before end of our class, I'll tell you a very important poem, motivational poem, and I hope you will technically going to correlate with that. It's a very short 4 lines, of course, but it's beautiful. So now we are moving on to our D category of income. Somebody asked me a query, sir, what is the D category of income? Please explain again. I did not explain it in detail because here is the provision of D category of income. D means that is composite business we were talking about. Determination of agriculture income in case of composite business. It's a very beautiful concept again, numerical concept again, and might be going to ask in your examination. So what is the meaning of composite business? We have discussed it. If you are doing some business which include the manufacturing activity as well as the agriculture activity, that is called composite business. As in case of rubber, if you are in a rubber business, rule number 7A says that 35% of the profit, whatever you are earning. Now, what is a rubber business? Let me tell you. If you are in the rubber plants and you are getting natural rubber from the plants, and then you are making product of rubber like eraser, etc., and selling into the market. So you are doing one activity which is producing the plant, etc., getting the natural rubber, that is your agriculture activity, and with the help of machine you are making the product which is marketable like eraser, etc., that is your non-agriculture activity. So whatever profit you are earning from that business, it's a fixed rule. Number 7 is say 35% of that profit will be treated as your agriculture income, and 65% of that profit will be treated as your non-agricultural income. Sorry, 35% is your non-agricultural income and 65% is your agricultural income. Same if you are into coffee beans business. So if you are in a coffee beans business, then the net profit 25% relate to your non-agricultural income and 75% is your agricultural income. If you are into a roasted coffee business or tea, then the ratio is 40 and 60%. 60% will be treated as agricultural income and 40% is your non-agricultural income. So rates are 35, 65, 25, 75, 40, 60. If an examination you forgot the what is agriculture part, what is non-agricultural part, you remember the rate like 25, 75, but you forget what is exempted, what is taxable. So in all 3 rules, common thing is higher percentage always treated as agricultural income, a lower percentage always treated as non-agricultural income. So if you are running these 3 composite business, then we have fixed provision. Whatever profit you are earning in total from both activities, because ultimately you are going to sell the final product, and the final product is eraser, not the rubber plant. The final product is coffee beans, not the plants. The final product is roasted coffee or tea, not the tea leaves. So whatever final product you are selling in the market, its sale price includes the agriculture activity price also. So whatever profit you are earning out of these both activities, we have the specific percentage. If it is given in question, we need to solve it like this. With the help of an example, I can explain you. Suppose we are a business of coffee beans. And what is happening in coffee beans business, the ratio is 25% and 75%. So the company must be making a profit and loss account, trading in profit and loss account, of course, manufacturing, trading in P&L account. Over here, it should be a sale of coffee beans. Whatever our final product, that is going to be in our sale category. Suppose the selling was 900 lakh rupees. Okay. Now the cost of cultivation. Cost of cultivation means the production cost. The production cost of coffee plants, coffee beans, what we are actually selling. The agricultural cost. That is cost of cultivation, we call it. And suppose it was 300 lakh. Now the other expenses, some expenses will be related to our agricultural activities. So we can say agricultural expenses, other agricultural expenses might be 100 lakh, and other than agricultural expenses like salary, like factory expenses, like machine depreciation, etc. That is non-agricultural expenses. That will be given in question. Okay. So that might be given in question 250 lakh. So total expenses is 3, 400, 650. So now our net profit will be 250 lakh. So if in question it has been asked that calculate agriculture income and non-agricultural, then out of 25% will be treated as non-agricultural, and this 75% of this value will be treated as agricultural income, which will be this much amount. The 62.5 lakh is non-agricultural, and balance 187.5 lakh is agricultural. Now it's a very beautiful thing, a very important thing I need to tell you. Then if in question it has been asked that calculate, and it should be asked, it will be asked in the question, calculate tax on this. Then you know what will happen? Your agriculture income exceeding 5,000. You can see that. Your non-agriculture exceeding 2.5 lakh. If it is a question of, suppose Mr. A, who is an individual, resident, age 45 years. So if they ask in question, calculate tax, then most of the students do what? They exempt this value and just calculate tax on this. And what will happen? Answer will be wrong. Because condition 1 fulfill, condition 2 fulfill, condition 3 fulfill. So now tax will be calculated as per the help of integration provision. So when we calculate percentage wise income, then in hurry, generally students skip that. The integration concept has been also applicable over here because all condition is fulfilled. So if the question asks calculate tax, then we have to again calculate tax as per integration provision. That means we have to calculate tax on 250 lakh. Whatever tax will come. Now surcharge will also applicable because income exceeding 50 lakh. So surcharge rate will be, because income exceeding 2 crore rupees, it will be 25% on whatever tax is there. Step number 2 will say now calculate tax on agricultural income plus exemption limit, that is 2.5 lakh. So now you have to calculate tax on 190 lakh. Again there will be tax, and now surcharge limit will be up to 50 to 1, that is 10%, then 1 to 2 crore rupees. And now this is more, 1 to 2 crore, it's like 15% surcharge. So now step number 1 and step number minus step number 2, that tax, and you have to apply cess on that. So be very careful. When component business question came, examiner always asked for calculation of tax. And what we generally do, we skip that integration provision. We generally exempt the whole agriculture income and just calculate tax on this value. In that case, your answer will be wrong. So if the coffee business case, if the roasted coffee case, if the rubber plant case, whatever your profit, you have to bifurcate it in agriculture and non-agricultural. And if the condition is fulfilled, then you have to calculate tax as per the integration provision. So these are the cases for three kind of business, but there can be more business. We do not have percentage for every business. We have percentage only for tea, coffee, and rubber. Three categories. Coffee beans have separate, tea and roasted coffee have same. So we have only percentage for these three business to bifurcate the profit into specific amount of agricultural and non-agricultural income. But what about other? If I'm a business into sugarcane and making the sugar. So if Mr. A, aged 50 year, resident in India, running a sugarcane business, produce sugarcane and then manufacture sugar and then sell it into the market, then we do not have percentage. For example, if the values is given in question, that is cost of cultivation, this cost of cultivation suppose for 50 lakh rupees, other agricultural income expenses, or we can say other agricultural expenses 10 lakh rupees, non-agricultural expenses suppose given in question 30 lakh rupees, sale of sugar suppose 160 lakh rupees. In other cases, other than three cases, one more extra information will be given in question. Without that, you cannot solve it. And that will be fair market value of sugarcane. There will be always fair market value of that agriculture produce will be given in question. And that is confirmed. Okay, let me change this sale of sugar. Let me increase the value. That is 250 lakh. Fine. So FMV of sugarcane has been given in question, suppose 90 lakh. That means if that assessee does not manufacture sugar from sugarcane, if that person does not manufacture sugar from sugarcane, then he can sell that sugarcane in the market for 90 lakh rupees. Technically, he manufactured sugar. But in other case, in examination, this value will be additional given, will be provided to you. Without this value, you cannot solve this question. Because in percentage cases, there will be information given as per the previous question I have just solved with you. But if there is any other question except this tea, roasted coffee, beans and rubber plant, then there will be one more extra information will be given. Now you need to do what? Because in this case, we cannot find out the separate agricultural and non-agricultural income because in question, we do not have any rules regarding the percentage. So in this case, we need to calculate two profits separately. One for agricultural business separately, we need to prepare two trading and P&L account. And one is non-agricultural business P&L account or trading P&L. It's very simple because you all are commerce students and you are in law intermediate level. So it's very simple. It's too simple. I'm just telling you a trick. By that you automatically frame it, automatically prepare it. There's no issue in preparation of these two profit and loss account. The trick is that when I'll ask you to prepare agricultural business profit and loss account or trading account, just forget about the manufacturing activities. Just forget about the non-agricultural activity. When I am going to prepare this agricultural business trading and P&L account, you have to assume me as I am a pure farmer. You should just assume that I am a pure farmer and I just need to thinking that what is my activity? I need to cultivate my sugarcane. I need to do other agriculture expenses and I need to sell sugarcane in the market. Understand? Just feel like a pure farmer. Just forget about the sugar. So whenever you need to prepare this kind of trading and P&L account, agriculture activity, just imagine yourself as a farmer. So what a farmer will do, he will cultivate his agriculture produce and sell it to the market. And when I'll ask you to prepare non-agricultural activity trading and P&L, then you have to think like a manufacturer. Just forget about the farmer issue. Just imagine yourself like a proper businessman who is only in non-agricultural activity. Now, suppose if I am not a farmer, but I need to manufacture sugar, then I need to do what? Then I need to buy sugarcane from market, buy sugarcane, and then process it, and then sell the sugar. And in this case, if I'm a farmer, then I do not have nothing to do with non-agricultural expenses and sugar, because I need to just cultivate the sugar and sell it to the market. So now how I'll solve, first of all, we will solve this agriculture business activity. Just imagine yourself like a farmer and tell me what should I consider where. Cost of cultivation will form part of my this P&L. Yes. So this will be my expenditure. Cost of cultivation 50 lakh. Other expenditure agriculture will form part of my agriculture business P&L. Yes. This will be over here. Will non-agriculture expenses will form part of my business? No. I'll not take it anywhere over here. Will sale of sugar will come my this P&L? No, because I do not know what is the sugar. I will only take only those activities which is connected to my agriculture business directly. And yes, FMV of sugarcane will be like my sale, because I am imagining. Practically, I am not technically sell my sugarcane. It is just for solving the question. So this will be my sale. So if this is my sale, what is my net profit? My net profit will comes to 30 lakh rupees. And that is from because of my agriculture activity. So this will be called my agricultural income. It's very simple. You just need to consider those activities which are connected to our agricultural business. Sale will be, FMV will be my sale, of course. And the cost of cultivation and other agriculture expenditure, that is going to be my expenses. My net profit is 30 lakh rupees. So agriculture income has been found out. Now in non-agricultural, what we need to feel like? We need to feel that we purchase sugarcane from market, then process it, and then sell it to the market. So I need to take over here purchase of sugarcane. So what is the value which should become over here? Because the FMV of sugarcane will be now my purchase. Cost of cultivation will not form part of here because I am not a farmer now. I am just treating myself as a businessman. So I need to purchase the sugarcane from the market. That is 90 lakh. Other agricultural expenditure, that is also not going to form part of my expenses because I'm technically a pure businessman. Non-agriculture expenses will form part of my, of course, this P&L. And over here will be sale of sugar. That is 250 lakh. So what is now my net profit is 130 lakh rupees. And that will be called my non-agricultural income. So if those three businesses which have specific percentage, in that case, FME will not be given in question. Even if it is given, ignore it. But in other businesses, FME will be in question, and you should prepare two profit and loss accounts separately and find the agriculture and non-agriculture income separately. Clear? It is very, very easy. Now again, examiner will ask calculate tax. You know what will happen again? Agriculture income more than 5,000. Non-agriculture income more than 2.5 lakh rupees. So if they ask for calculate tax, then again you are going for integration provision. Always remember, whenever there is agriculture income question, there will be integration provision. Examiner will check whether you just know the provision of agriculture income or you know exactly the whole process of taxability of agriculture income. And most of the students technically do not know this integration provision this deeply. So I hope you will be able to solve the question. One question also in the notes. That's the fourth point what we are discussing for other businesses, other corporate business. Market value of agriculture produce utilized will be deducted from sale price of finished goods as a purchase. Here's also a question. Cost of cultivation of sugarcane is 10 lakh. Processing cost. Processing cost always means non-agricultural activity. Sale of sugar is 50 lakh. FMV of sugarcane utilizes 25 lakh rupees. So you have to calculate again the agricultural and non-agricultural income out of this. So we have complete agricultural provision. Now there are very simple and reading provision. Only section 10AA which is left, which is a technical provision for the purpose of numerical. Otherwise, now there are only theoretical provision which are very simple. First is other small provisions for every income exempted, etc. Amount received by a member from the income of the HUF. If you are running an HUF, you are running a HUF, and if the member receive anything from HUF as a profit, as a salary, as anything, that is going to be exempted in the hands of the members. As explained in chapter 1, a HUF is a person and hence a unit of assessment under the Act. Income earned by the HUF is assessed in its own hands. In order to prevent double taxation of one and the same income, one in the hand of HUF, which earn it, and again in the hand of a member when it is paid out of him. Section 10 to provide that member of a HUF do not have to pay tax in respect of any amounts received by them from the family. So if HUF is paying anything, salary to their member, profit part to the member, etc., they do not need to pay tax on that. So anything received from member of HUF is exempt on section 10(2). The exemption apply only in respect of payment made by the HUF to its member out of the income of the family or out of the income of the impartial estate belonging to the family. For example, already given over here, Mr. A, member of HUF, received 10,000 as his share from the income of the HUF. Is such income includable in chargeable income? The answer is no, it is exempted. Share of income of a partner, they all are simple theoretical topic. If there is something technical, I'll explain in detail. Otherwise, we are just reading it. I'm just trying to explain it and you will be understanding the single line provisions. If you are a partner in a partnership firm, then any profit received from that partnership firm, any profit received from the partnership firm will be exempted in the hands of partner. If you are receiving salary or interest, that might be going to be taxable. There is a section 40B. 40B, you are going to read in business head provision. That will explain how much salary and how much interest is going to be taxable. But profit received from a partner, from its partnership firm is 100% exempt. This clause exempt from tax a partner share the total income of the firm. In other words, the partner shares in the total income of the firm determined in accordance with the profit sharing ratio will be exempt from tax. Okay. Interest on money standing to the credit of individual in his NRE account. NRE is non-resident external account. So if you are a non-resident, in India, and if you open a bank account in India, like we open a saving account in India, we are a resident. So if you are a non-resident, then you have to open in India. If you want to open an account, that should be called a non-resident external account. And if any interest accrue in that non-resident external account, that is going to be exempted in the hands of the non-resident. Why? Because the money comes in that account in dollars, in foreign currency. So government will encourage that non-resident should deposit money in that account in foreign currency. So to encourage them, government made this provision that interest amount will be exempted in their hands. As per section 10(4)(2), in the case of an individual, any income by way of interest on money standing to his credit in a non-resident in any bank in India in accordance with Foreign Exchange Management Act so and so, is a person resident outside India, of course, is a person who has been permitted by the RBI. In the context, it may be noted that joint holders of the NRE account do not constitute an AOP by merely having these accounts in joint name. The benefit of exemption section 10(4)(2) will be available to such joint account holders. So what we are exempted? Interest. Simple provision. Interest on NRE account is exempt from tax. Remuneration received by individuals who are not citizens of India. Individual assessee who are not citizens of India are entitled to certain exemption. It's a very simple provision that if outside our country, like if another country's persons are working in India, in their embassies, like we have ambassador in other countries, like we have embassy in Japan, China, America, etc. And our officials are working there. In the same way, their embassies in our country also, and their officials, their citizens are working in India, and they are getting salary from their country, from their government, into India. So that income is technically received in India. So it should be taxable because income received or arise in India is taxable. But department has exempt those officials' income, those are working in our embassies, because the same they did also for us. So our ambassador, if receiving income in other countries, so that other countries are not taking tax, even when they are earning over there and they are technically receiving there also. And we also give the same exemption to those. So these are just reading provision, nothing technical. The remuneration received by a person for services as an official of an embassy, high commission, legation, commission, consulate, or the trade representation of a foreign state, or as a member. Exemption. Condition: the remuneration received by our corresponding government official or member of the staff resident in such foreign country should be exempt. So it says, if you will exempt our country officials' income, we will exempt your country officials' income over it. Fine. So just a barter system, give and take. The above mentioned members of the staff should be subject of the respective country represent and should not be, but they should not do any business in India. They should be only working on behalf of their government, then that salary is going to be exempt. Remuneration received for services rendered in India as an employee of foreign enterprises. This is again the same. Some specific cases. There are some specific employee, those have exemption if even receiving any salary in India. Remuneration received by a foreign national as an employee of foreign enterprises for services rendered by him during his stay in India is also exempt from tax if their certain condition has been fulfilled. The foreign enterprise does not engage in any business or trade. The employee stay in India does not exceed 90 days. The remuneration is not liable to be deducted from the employer income chargeable to tax under that. So these are again reading provision, nothing technical. Salary received by a non-citizen, non-resident for service rendered in connection with employment on foreign ship. Please read it again. Make short note of these points. Again, I am telling you, just make short note of these notes. Okay, tell me, any one of you try to learn those section trick, what I have told you? Anybody try to learn them, and is it really work for you or not? I'm waiting, send me your feedback. I want to know if anyone of that sincere that he tried it, he or she tried it, and it worked for it. It will work. I'm telling you, if you didn't try yet, please go for it. You'll try it. Again, the same kind of provision. These are very short provision. You can make short note of these provisions, so you'll learn all these provisions. Very simple. Okay, for remuneration received by a foreign government employee. So these all 1, 2, 3, 4 points are regarding the non-resident. Those are receiving remuneration in India. Whether you are an ambassador, you are an enterprises, you are on a foreign ship, or you are a government foreign employee. You need to read the condition, and nothing important in these conditions. Royalty income or fees for technical service received from National Technical Research Organization. If you are receiving service from NTRO, that is exempted. Payment to Bhopal gas victim, section 10BB. There was a Bhopal gas leak disaster has happened in 1985. So if there is any compensation received to the persons, the victims, that is going to be exempted. Department is exempted from the tax. Okay. Compensation received on account of disaster. This is important. It has been asked in examination also. It has been already asked in your examination. It says compensation received on account of disaster. Disaster means something like natural calamity. We can say disaster. Something is beyond our control. So if there is any disaster happened, and central government, state government, or local authority, this is very important to understand. Only these three, if any of them paid you any compensation, that compensation is going to be exempted. Only by way of these three organizations. The clause exempt any amount received or receivable as compensation by individual, or is legal here, of course, on account of any disaster. Such compensation should be granted by the central government, state government, or local authority. However, exemption would not be available in respect of compensation for alleviating any damage or loss, which has already been allowed as reduction under the Act. Disaster means catastrophic, mishappening, calamity, or grave occurrence, or we know that. So there is a question which has been asked, compensation on account of disaster received from a local authority by an individual is exempted or not? Yes. But in the examination, it was asked that compensation on account of disaster is received from a society named Yatra Fund. In examination, the question was this, that 1 lakh rupees compensation has been received by Mr. A on behalf of a disaster, and it is received from a society which is called Yatra Fund. So whether it is exempted or not, the answer was no, because Yatra Fund is not, again, I told you, hear it, implement, and then speak. So if you reading the question that it is received from Yatra Fund, then do not answer directly. Now remember or recall the provision. The technical provision is it is from central government, state government, or local authority. So is Yatra Fund a society? Does fall in any of these three? No. So you might be able to answer almost all the question if you follow this process, and of course if you actually learn the provision. If you not learn the provision, if you do not remember the provision, then you're not able to follow this trick. Then you have to make sleep your mind, just hear it and answer it. So a good student always hear the question, understand the question, then he or she need to recall the provision. Then try to implement that question in the whatever the provision you recalled. And if it is the answer will be there, it might be, I personally feel most of the answer will be correct. Next is payment from Sukanya Samriddhi account. There's an account scheme has been started by the government. So if you deposit some amount in this account and get the interest in future, that is exempted under section 10(11)(a). Scholarships are exempted from tax because it's for education. So government want to encourage their education. So scholarship will not be treated as your income. Payment to MPs and MLA. MPs is member of parliaments, MLA is member of legislative assembly. MPs technically represent central government, MLAs technically represent the state government. So if they got anything, that is exempted because they are the government. So daily allowances received by any member of parliament or any state legislature or any committee thereof, exempted. Constituency allowances of MPs, that is also exempted, and constituency allowances of MLA, those are also exempted. Award for literary, scientific, and artistic work and other awards by the government. If government give you any award, whether in kind or in cash, monetary, non-monetary, that is going to be exempted for you under section 10(17)(a). Pension received by recipient of gallantry award, that is also exempt section 10(18). You need to read these provisions. These are simple theoretical provisions. Income of a member of a scheduled tribe, again, go for it, read it. A specified income of a Sikkimese individual, these are not so important for examination, but you should need to read it once. Just read it once. Their example also, tea board subsidies exempted, other subsidies are exempted. Okay, so we have complete our this topic. Now we left this section 10AA provision. Before starting the section 10AA provision, I will take the queries, then we'll move on to our section 10AA provision. Let's see the queries. Yogita Kumar Devra is saying, your examples are out of this word, sir. Feeling very refreshed. Very good. Thank you so much. Milton Kumar, if income from breeding of livestock, income from poultry farming, income from fisheries, income from dairy farming, then in which head they will be treated? This is your business. If you're doing poultry farming, of course, and your dairy farming, that is your business activity that will be taxable as PGBPA. When you will, we are discussing what is not agriculture. That is not agriculture. What it is, you will get your answer when you continue these classes. Another faculty will teach you different chapters. You will understand, okay, this will fall in this category. Okay. Sir, I asked the same question twice before. Sir, did integration contradict rule number 7? What rule number 7 you are talking about, Vikas Bansal? And how it is contradicted? Technically, agriculture income is still exempted. Okay, it's still exempted. Technically, we cannot say we taxed it. That's a mathematic. That's a slab rate according to which it has been taxed. But nobody can say that agriculture income is taxed, because we just calculate tax on agriculture income and we deduct the tax on agriculture income. That is the problem of slab rate. If there is no slab rate concept, like in the case of partnership firm, you cannot say we tax it, because in case of partnership firm, the whole tax of agriculture income will be automatically deducted. So that's a mathematics issue, but technically you cannot say that agriculture income is taxable. Okay. Hitesh, and if we give nursery business on rent and it's taxable or not? Yes, if the rent is receiving from nursery business, that is going to be taxable, because rental income is exempt only if there is a farmhouse rent or is agricultural land which is given for farming purpose. So I told you, whatever your question is, no, you just try to do this, hear it, understand this, and apply the provision. Just apply the provision. You will get your answer, and you will be amazed that wow, I knew this answer. Always stick to the provision. Income tax is very, very, very technically strong. And if you have any question in your mind and brain, just try to put into the provision once, and you will see the answer will be with you automatically. Fine. So what if agriculture income exceeds 5,000 but non-agriculture income is less than? Then the integration will not apply. If the non-agriculture income is less than exemption limit, there will be no integration. You can try it. You can take a question where agriculture income is 10 lakh and non-agriculture is 2 lakh. Calculate tax, whether you apply integration, whether you do not apply integration, answer will be nil. Fine. What was that? Kaveri Pagare. Okay. So if non-agricultural is less than 2.5 lakh, the answer tax liability will be nil. So in cost of cultivation, cost of packing is included or not. It does not matter if the cost of cultivation means the value of that product till production. So it depends what we consider in that. So it might be including packing, it might not be, but if in question it is separately given other expenditure of agriculture income related, you can add or deduct it also. Within 25-75, I told you the higher percentage always represent agriculture income and the lower percentage is treated as non-agriculture income. Mukta Vyas, sir, there is a student in our official student group because also we need to understand that sir did the integration control rule. I just explained it, okay. Sweta Jain, NP for agriculture is 30, NP for non-agriculture is 130. Non-agriculture expenses credit sale. Okay, integration is very important in this question. Harsh, please solve example which you given another that tea, threshold, rubber, sugarcane, please. Okay, I'll try to solve it after this query session. Prabhas Jain, sir, there is also a NRO account, if not wrong. But difference between this is you should refer FEMA and you understand the meaning of NRE and NRO account. Okay. Sarup Singh is asking, sir, I am little confused. Doubt related to previous class in determining user status to whom. Second basic condition is not applicable. When I crack, it shows different number of days like 182, 120 is applicable to Indian citizen, person of Indian origin. Please go to the class in which I have actually explained in detail all this provision. Please take session number 2 and session number 3 and session number 4. I have explained it. Please go through that. Okay, next is, okay, Sarup Singh's technique is working, very nice. If we have done that, that's very, very, very important. नीलोफर फातिमा सर पोएट्री आपने कहा था लास्ट में सुनाएंगे, बिल्कुल सुनाएंगे, बैच क्लास खत्म होने से पहले पोएट्री सुना कर जाएंगे, ठीक है? ओके, ठीक है? This is called interest. Students are so much interested in poetry. If I'll say I'll dance in the class, in the end of the class, you might be more interested. If I'll say, okay, fine, I'm going to sing a song for all of you, you might be more interested. This interest should be created for study also. When a faculty came, when you open your book, you should be that interested. Oh, wow, now we are going to understand a new concept. If some faculty, if I'm teaching you agriculture income, that should be the way. Okay, first, sir is going to set up poetry, sir is going to sing a song. So that is increasing your interest. That's what I'm saying. If you have that kind of interest in your study, what you have for like a party or a song or a dance, you will find it very, very easy. That studies are very easy. And this is your future. This is not only studies. What you are doing, you are just doing for your bright future. Once you have complete this course, you will get a lot of money with respect. That's really, really matter. So this is that important. Next 2-3 years, you need to give everything. You need to sacrifice a lot of things. And in that case, you will feel that this really worth it. And I ask you, stay away from your friends, those going to call you when you study time. Will you try it? Okay, and just phone is the most dangerous thing in your study. This is the top most speed breaker in your study things. So just try to distract from that device. Okay, so poetry, okay. Ayush, I did not get that point. Salary other than business and trade in case of foreign receipt exempted from tax. Salary other than this come from where? What are you asking, Ayush? I'm not getting about what you are asking at this point. When someone gift a car to you, will it account for tax while calculating tax on income? This will fall in your income from other source topic. For timing, I can tell you, if you're getting a car from gift in a gift from anyone, that is not fall in your taxability. Okay. 10BB is not in module. I am going to teach you 10AA, not 10BB. And 10AA is in your deduction chapter. But we are going to discuss it over here in chapter number 3. Okay, Vikas? Preeti is saying, sir, I have put a chart in my room and written section and I read that chart daily and now my brain has started catching those sections. Brilliant. Well done. High five from Wi-Fi. Okay. Yogita Kumar did not try honestly. Please try it. It will help. You have a lot of time till examination, so you can try that and you will feel in a 20 or 30 days. You will learn almost more than 100 and 200 sections. Whatever you put on that wall, you will learn all of them. I truly believe that. A person winning certain amount in KBC, will that income is accounted for tax? That is income from other source. That is called casual income. That is going to be taxed. I am telling you, you will read in this also income from other source. Gallantry awards like Paramveer Chakra, etc. Milton Kumar is saying, okay, sir. Sir, is the award for man of the match is exempted? No, that's going to be taxable. That's not given by government as an award. Cattle rearing comes under which head? Depends. Poem, I'll tell you the poem. Okay, where is this chapter? These are not kind of question you should ask. Every chapter is important. Do not ask the weightage, etc. Everything is important. Understand? Okay. Poonam Sharma. Okay, sir, how do I join the student group? I do not know how we are going to join the student group. Ashutosh. Okay. Right. Now moving on to our last topic, that is section 10AA. Okay, this has been completed. Okay. This is section 10AA. This is a special provision for newly established undertaking, section 10AA. In a special economic zone. So what happened? Government technically specify some area. To develop that area, government asks manufacturer, go and establish your unit in a particular area which is underdeveloped. But businessmen, industries do not do so until there is some benefit. So now government did what? Government technically specifies some area as a special economic zone. A special economic zone means you can say tax benefit zone. Government say if you start your business in that area, then we will not charge income tax. We will give exemption from GST, etc., etc. So now businessmen will try to open his new business, etc., in that zone. And if you open your business or industry in that zone after fulfilling certain conditions prescribed by government, then you might get 10 years income tax advantage, or in some cases 15 years. You need not to pay any tax, or you need not to pay GST also. So there is a very huge benefit given by government. So whenever you read this word special economic zone, or in short we can say SEZ. So what is these? These are tax benefit places. There is nothing here. There is tax benefit zone. There is tax free zone, we can say. So like Gurgaon has some these kind of area, Noida has some these kind of area, and government if want to develop any area, so they can do this by declaring that a special economic zone and provide some tax benefit. But that is not that easy that we just go and open the business and we get the benefit. There is a multiple condition we need to fulfill to get this benefit. Okay. That is, you can see the special economic zone picture. It looks so beautiful. Okay. So special provision in respect of newly established unit. First of all, you should understand, if government declare any area special economic zone, and if there's any existing business unit is there, then this benefit cannot be availed by that specific business unit that is only applicable, only benefit will be given to the newly established unit, which will be established after the declaration, after the government benefit. Assessee exemption, who can get the benefit out of it? Exemption is available to all category of assessee. Exemption is available to all category of assessee who derive any profit or gain from an undertaking being a unit engaged in the manufacturing or production of articles or things or provision of any service. So whether you are in a service industry or you are in a manufacturing industry, you can get the benefit of this section 10AA benefit, tax benefit. Such assessee should not be an entrepreneur referred to in section 2J of SCZ Act, a person who has been granted a letter of approval by the Development Commissioner section 15(9) of the said Act. Fine. So that person should be an entrepreneur. He should get the certificate. Condition number 2, the exemption shall apply to an undertaking which fulfill the following condition. The condition number 1, it has begun to manufacture or produce article or thing, or provide any service in any SCZ during the relevant year to assessment year 6-7 or any subsequent assessment year, but not later than assessment year 20-21. So you have to start your business beginning from 2006-7 assessment year till assessment year 20-21. The assessee should furnish in the prescribed form before the date of that is specified in section 44AB. 44AB is tax audit section. 1 month prior to the due date for furnishing return to income tax in section 139(1), the report of a chartered accountant certifying that the deduction has been correctly claimed. So if any assessee wants that deduction under section 10AA, then he has to furnish a certificate taking from whom? Who we are talking about? Chartered accountant. You can write your name in front of this. So assessee needs to take a certificate from you. So write down your name and make a question mark because you're not yet a chartered accountant. So if you want to remove that question mark, you have to be a CA and you can do that. I've told you many times. If I can do a CA, I know every one of you can do a CA because I'm a very, very average student, right? So certifying that the deduction has been correctly claimed. So this is an example that you need to submit a certificate from a CA, of course. Period of deduction, that is very important. In the deduction chapter, you have to read the who can be the assessee and the report requirement. And the third point is period of deduction. That is very, very important to find out how can we claim the deduction, what amount of deduction we can have. So section 10AA deduction. Okay. Section 10AA say that you will have deduction for first 5 years like this. First 5 years, your deduction under section 10AA will be 100% of this profit of the business upon export turnover total turnover. Profit multiply export turnover upon total turnover. In short, we can say profit into ET upon TT. So for first 5 years, whatever amount will come out of this formula, that is going to be exempted, and that is 100% exempted. So if your profit is, for example, 200 lakh, and with the help of this formula, value came 160 lakh, then section 10AA deduction is 160 lakh, and you can claim this deduction. Understood? For first 5 years, we have 100% deduction, which will come out of this formula. What is the meaning of export turnover and total turnover? I will explain to you. Next 5 years, again, the exemption will be now 50% into P into ET upon TT. Same thing. Okay. Now the third case. Now before moving on to third year condition, Let me explain you the meaning of export turnover and total turnover. Total turnover means your domestic sale as well as export sale. For example, if you sell 1000 lakh in domestic market and 800 lakh in export market, then total turnover will be 1800 lakh. So now what will be the export turnover? So you might be thinking export turnover is 800 lakh. That is not so. That is the trick. That is the main point. Total turnover will be 1800, but export turnover is some different meaning. Export turnover says whatever is your export sale is in our question 800 lakh. Out of that sale, whatever amount you have remitted into India or brought into India, whatever amount you have brought into India, do not confuse it brought for resident, etc. This is only for formula. Over here, we need to consider brought or remittance. Do not confuse. I have said in remittance or in resident case, I have to ignore the brought and remitted. This is not connected to those provisions. This is for exemption purpose. So out of that 800 sale, export sale, whatever amount you will brought into India in convertible foreign exchange up to 30th September 22. The fixed date 30th September, 6 months from the end of your financial year. So your financial year end on 31st March 22. So date has been extended up to next 6 months, 30th September 22, or this date can be extended by the RBI. So if RBI extended up to 30 December, then you will take up to 31st of December. So whatever amount you will brought into India in foreign currency, convertible foreign exchange, that will be called export turnover. So out of that 800 might be in question given that you only brought into India 300, and that will be 300 in place of export turnover up to 30th September. If RBI extend this date up to 30th November, it will be given in question if RBI extended, and till 30th November, assume we brought 400, then it will be over 400 will be called export turnover. So that is very simple. I hope you understood. Now the next 5-year mode. So first 5-year 5, the next 5, that means total is now 10. So now total can be 15 because we have last 5 years benefit also. So total or maximum benefit under section 10 AA can be up to 15 years. And that is also again 50% P into ET upon T. So anybody can tell me that what is the difference between point number 2 and 3? If this is same, then why we bifurcate into two category, 5-year and then 5-year? Then we should write it like 10 years, 50% into P into ET upon TT. So can somebody identify what is the difference between point number 2 and 3 so that we write it separately? I am waiting for an answer. Can anybody point out the difference between point number 2 and 3? Because if there is no difference, we can combine this category, but we have written down it separately. In the act also, it has been explained separately. So there might be some difference. So what different you can see in this point number 2 and 3? Can you tell me? With the help of this whiteboard, I have written point number 2 and 3. You have to find the difference between 2 and 3. What is the difference? That's why it has been written separately, except the color. I have written green and the next one is red. Do not give me that kind of answer. That sir is a red and green. There is some technical difference in point number 2 and 3. Kindly tell me. I am waiting for your answer. Shreya saying if a non-resident receive remuneration in NRE account maintained in an Indian bank, that is going to be taxable if it received over here. If received somewhere else and then remitted to this account, then it's not going to be taxable. But if received directly to the NRE account, that is going to be taxable. Mukta asking if a person doing his internship is stipend are accounted for tax. Yes, it will be taxable. If it's more than your exemption limit, that is going to be taxable. Okay. Preeti asking, is it last session with you? Yes. So set till now, this is my last session for you. If Board of Study allowed me for more lectures, I'll come back again. Do not worry. But you have to work hard. Okay. Equivalent amount transferred to reinvestment reserve. Sir, maybe we get 18 assessment year 22, which can be deal. Point number 3. Okay. Very good. It's for like, there is no difference till now in point number 2 and 3. Okay. I was just trying to see what answer you can give in. So there is no technical difference in point number 2 and 3 right now, but there is an additional condition. Some students have given me the additional condition. Yes, there is some additional. Now the difference will be over here. Of course, because if there is no difference, then we can combine these years. But there is a slightly difference, and that says you have to transfer this amount. If you want to get benefit of next 5 years more for this 50% of benefit, then you have to transfer this amount, whatever will come. For example, the 50% is like 30 lakh rupees. Then you can get the benefit of section 10 AA deduction from your profit. But you have to transfer 30 lakh rupees to reinvestment allowance reserve. You have to make a specific reserve that's called SCZ RRA account. Reinvestment Re-allowance reserve account. You have to make a separate reserve and this amount should be transferred to that reserve. If you are transferring it, then you can take the benefit of every year 50% more. For every year, you have to do that. For first 5 year and next 5 year, you need not to transfer anything to the reserve. But for this last 5 year benefit, whatever amount deduction you need to transfer it to the SCZ RRA account. If deduction is 30 lakh, but you transfer only 20 lakh, then the benefit will be restricted to only 20 lakh rupees. What you will do with this reserve? You need to purchase new plant and machinery for the business. Within 3 years, from the amount, you transfer to such reserve. So you need to purchase new plant and machinery for the benefit of business. Within 3 years, the year you created that reserve. If you did not purchase new plant and machinery out of that reserve amount, then the deduction is going to be taxable after expiry of 3 years. If you misutilize that amount other than any other purpose, then again this amount utilized is going to be taxable in the year in which it is misutilized. So we have the provision. I will upload the MCQ of today and one more MCQ of chapter number 3 and one more MCQ of chapter number 2. Total 5 MCQ sheet need to be uploaded. I uploaded chapter 1 basic concept to MCQ sheets. Now tomorrow I will upload 3 MCQ question sheet, 2 for residential topic and 1 for today topic. Okay. So this is period of deduction. The unit of an entrepreneur which begins to manufacture or produce any article. So first point is like this, 100% of profit. You can read it out, of course, for 5 consecutive years, 50% of profit for again 5 assessment year. This is the third condition. 50% of profit as is debited to the profit and loss account in the previous year in which the deduction is to be allowed and credit to a reserve named Special Economic Zone Reinvestment Reserve Account, SEZRRA account. For next 5 years, if you want to avail the benefit of next 5 years. What you need to do with this reserve amount? The amount credited to the Special Economic Zone Reinvestment Reserve Account is utilized for the purpose of acquiring machinery or plant, which is first put to use before the expiry of a period of 3 years following the previous year in which the reserve was created. Until the acquisition of the machinery or plant as a for sale for the purpose of the business of the undertaking, However, it should not be utilized for distribution by way of dividend, for remittance outside India, for the creation of any asset outside India. So till 3 years, you can use that reserve amount for other business purpose, but you cannot use it for these three specific purposes. But ultimately, within 3 years, you need to purchase new plant and machinery with the help of that. So this is a CBDT provision that you have to inform the income tax officer with filing of return in which year you are going to purchase that new plant and machine. This is the procedure part. Consequences of misutilization and non-utilization I've explained to you. If you misutilize it, that amount is going to be taxable in the year of misutilization. This is the universal provision. You are going to do it anywhere. If some amount is misutilized, it needs to be taxable in the year of misutilization. If some amount remaining unutilized, then it's going to be taxable after expiry of that time duration within which you need to utilize it. Computation of profit, this is the formula, of course, we discussed. There's a meaning of export turnover. Restriction on other tax benefit. If you take the benefit of section 10AA, then you cannot take the benefit of this thing in any other section. Whether any goods and services, you can read it over here. The assessing officer shall compute the income like that. Section 3580 not applicable. 3580 we will be going to discuss in PGBP section. Deduction log in case of amalgamation or demerger. If your section 10AA business is amalgamated into another company or demerged into a resulting company, then that particular deduction can be claimed by the new company. Now the amalgamating company can claim the benefit of remaining years. Like after 3 years, your business amalgamate into a new company and your deduction was 15 years. But after 3 years, it has been amalgamated into a new company. Then the new company can claim deduction for remaining 12 years. In the same case of demerger, if the demerger happens, then the resulting company can claim the benefit of remaining years. These are solved example. You should try that with so you will be understand. And this is, of course, a big thank you to everyone who actually listened to me. And this is my advice to you: revise twice. That's my advice to make you wise. Where we have one more thing, and that is test your knowledge. I also uploaded this also, so you can have practice of this question. Those kind of question can come in your examination. Please do solve all chapters, test your knowledge question of study. These are technically very brilliantly, very excellently drafted. In the examination, you can see that question can be framed on behalf of these provision on these questions. Let me take the queries if there is anything left. Okay. Equivalent amount transfer. Mukta saying we are going to miss your live class. Okay, I'm going to miss you too. I hope somebody board of study will think and make a get together of all the faculties in the board of study or their institute and call all the students for interaction between board of studies faculties and the students. So might be at that day we are going to see each other, and I love to see all of you because here is only you are going to see me. I'm not able to see you all. So might be someday if it happens, definitely we are going to see each other. Okay. A poem. Okay, yes. The poem left. So look, this is the interest. This is what I say you. Okay, you have interest in, you should create interest in things. So a lot of students asking for a poem, and I'm thinking, wow. So if this kind of interest you can have in your studies, then nothing can stop you. Nothing can stop you to achieve what actually you want in your life. So do study. Of course, even the other faculties will come. They are also very good faculty because institute is finding best faculties for it. Fine. So you should keep creating your interest in your study. Hard work. There is no shortcut. Keep things very simple, and you should understand one thing. It's a difficult course. It needs your sacrifice. So let me tell you, when I was doing this course, pursuing this course, so at times we became frustrated, irritated. There are in every student's life, it's not that simple. Where I am now, I was also suffering a lot of things when I was doing this course, professionally, personally, financially. It happens with everyone, more or less. Fine. So it happens that sometimes we feel a sort of depression, and in that time, I made a poem, and that's a promise. You have not heard this poem anywhere else. I've also told this poem in my first board of study session, like in 2021 session only. In that session, I share this poem with the students and with nobody else, right? So poem, or you can say the shairi is like this. So I'll tell you in Hindi, and then the English version also is there. So the students who do not know Hindi, they will also understand the meaning of it. So first of all, it is in Hindi for all of you. And whenever you feel depressed, when you feel that you might not be going to crack this course, remember this poem. It will definitely help you. And it's like this. इस दिल की धड़कन कहती है उम्मीद अभी भी बाकी है. इस दिल की धड़कन कहती है उम्मीद अभी भी बाकी है. ये रात कभी तो गुजरेगी, वो सुबह कभी तो आएगी. एक दिन ऐसा भी आएगा, एग्जाम का टेंशन उड़ जाएगा. एक दिन ऐसा भी आएगा, एग्जाम का टेंशन उड़ जाएगा. एक दिन ऐसा ही आएगा, मेरे नाम में सीए जुड़ जाएगा. ओके, तो एक दिन ऐसा ही आएगा, आप सबके नाम में सीए जुड़ जाएगा. And then you will feel the worth of this profession. So those are from English. Do understand the Hindi? Let me tell you the English version. This English version has been made when I took the first BOS session. So at that time, all of the students asked, "Sir, please in English." So I made the English version of this. I don't know how it is, but it's like this. My heartbeat says, hope is still remain. My heartbeat says, hope is still remain. Night will pass away and sun will rise again. Okay, night will pass away and sun will rise again. One day will come when examination tension will go away. One day will come when examination tension will go away. And one day will definitely come when CA prefix with my name will stay. One day will definitely come when CA prefix with my name will stay. So with this poem, etc., I say all the best to all of you. Please study hard. And believe me, I'm saying something to you. You are on the right path. If you are not starting study seriously, still we have a lot of time. You can do that. Do not do one thing. If you are weak in some subject or in some topic, do not leave that. You have to work hard and it will be easy for you. So please just go for the complete study, take the live sessions, and whatever your faculty told you, please follow it. It will really gonna help you in future also. So I'll upload the MCQs, 3 MCQs left. I'll upload them in the portal and you can see that. And as I told you, might be we're going to see someday each other live. Till that, take care. Good night. All the best. And hope for the best. Bye. So session complete, Mr. Ram?